Hey guys, hope you're having a great day. Your old buddy Tim back with another video. And in this video, we are talking about down payments. Now, I get asked quite a bit, primarily by new or first-time homeowners, about down payments, how much they have to put down, what is the pros and cons of putting down a certain amount. So I thought I would just take a couple of minutes and kind of do a quick review with you. And if you've never heard this information before, of course, it's not a review. It's relatively new. So let's talk about down payments. Down payment is the amount of money that you are required to put down when you purchase a home, okay? And the amount of down payment required varies. So let's talk about what's kind of normal, or what has become what we call the ideal amount, and that is 20%. Now, 20% is a big chunk of change. If you're putting down buying a $100,000 home, you're talking about $20,000. If you're buying a $200,000 home, you're looking at $40,000. But there is a reason why lenders like for you to put down that much. And again, you can put down as much as you want, over 20%. Let's say you want to put down 50%, whatever. But 20 is kind of the sweet spot because it gets you out of having to pay what's called PMI, which is private mortgage insurance. Private mortgage insurance is insurance that you pay for that protects the lender in case you default on the loan. I think there's a train of thought that if you are at least vested 20% in the overall value of the house, the odds of you defaulting on that loan are much less than if you only had, say, 5 or 6 or even 3% there. So they have you buy what's called private mortgage insurance, meaning if you default, the insurance is going to take care of the lender. Now, as long as you have 20% of the equity in the house, i.e. the down payment, you don't have to pay PMI. And here's a quick note for you as well. Let's say you didn't have the 20% to put down initially. Once you pay your loan down to where you own 20% equity, you can then request that the lender remove the PMI insurance from your loan. And it could save you anywhere from a couple of $100s or more a month on your monthly payment. So the biggest benefit of putting down a minimum of 20% is you avoid PMI. You avoid the private mortgage insurance, and you have more equity value in your home. It's not like you're throwing that money away. You are investing it in the property, so you know that as long as the market is steady and going up, your 20% or your 20,000 down is going to grow in equity. So another reason why you might want to put down 20% or more is because you typically can get a better interest rate by putting down more money. You know, if you put down, let's say the minimum, which is 3%, your interest rate might be here, but if you put down 20,000 or 20%, your interest rate may be much lower. So, you know, the reason that is when you put more down, you put more into the home, in the lender's eyes, the risk that you're going to default and they're going to have to take the home back is much less. So the other thing that is a good reason to put down 20% or more is it will lower your monthly payment. All right, keep in mind, whatever you put down is deducted from the amount of money they're going to loan you on the house. So the more you put in, naturally, the lower your monthly payment is going to be. You know, and another reason is this. It kind of can give you a competitive advantage over other buyers. Because when you put an offer in on a home, you indicate how much you are going to put down. And in a seller's mind, your offer is better the more you are going to put down, the more skin that you're going to put in the game, the more vested you are in purchasing this house. So 20% is ideal. You forego the PMI, you can probably get a better interest rate, your monthly payment's going to be lower. Well, let's say you do not have 20% to put down. You're going to buy a $300,000 house, 20% would be $60,000 that you would need to have to put down. And so maybe you don't have that. So let's look at the minimum requirements. On a conventional loan, most conventional lenders will do a minimum of 3% down. All right, so if you are buying a $200,000 home, 3% is only $6,000, and so you're going to finance 97% of the home's value. So if you don't have the 20% and you have the 3%, you can put that down, but you are going to pay the PMI. Your payments are going to be higher, and you are not going to have as much vested equity in the home. There are loans that you can put 0 down. Now, these are VA loans, USDA loans, but you must meet the minimum requirements. Okay, I don't want to go into those details too deeply here, but for a VA loan, for example, a lot of the rate and that sort of thing could be based on your length of service, what type of discharge you were given, that sort of thing. And to do a USDA loan, we call them farm loans, you must be in an area that is qualifies for USDA loan funding. Okay, so you can put 0% down. If you're doing an FHA loan, you can do a minimum of 3.5% down. You have to qualify. One of the things they look at is your credit score. So for most conventional lenders, you need at least a credit score of 620 or above to be able to just put down that 3%. And if you are looking to do a 0% on an FHA loan, you've got to have a minimum credit score of 580. So keep that in mind. So long story short, the down payment is the amount of money you put down on the home that you are purchasing, and you will borrow the rest. Ideally, 20% helps you avoid PMI, will get you a lower payment, can get you a lower interest rate. You can find conventional lenders, they're everywhere, who will let you do a deal or borrow money for 3%. And, you know, again, just be prepared. When you do that, your interest rate's going to be a little higher. Your PMI, your monthly payment's going to be higher, but you are going to be able to buy a home without putting the large payment down. All right. Hey guys, I hope that was helpful. Hey, if you are a first-time homeowner, or even if you're not, and you are looking at moving to this area, or you're already here and you would like the assistance of fastest growing little independent brokerage in town, that is us, Revolved Realty. We've got 95 agents now ready to go to work for you. So we would be more than happy to help. Hey, if you like what we do here on the channel, do me a favor, click the subscribe button, wherever it may be. Give us a thumbs up, click the little bell, and that way you never miss another video here on the channel. So that's it, guys. As always, if I can do anything for you when it comes to real estate, do not hesitate to call. My information is below. And until we see each other again, have a great day.